Hello folks, and this is episode 3, patterns and logic. My focus today will be on how to actually trade an expansion candle, more specifically the daily range, before and after we hit the key level, right? It's going to be a very advanced, full of new formations, so I will assume that you guys has already watched the first 2 episodes and digested the market profiles. So let's get started. I will just repeat before I get started. This is not for beginners. It's only for advanced people. I will assume that you're already into ICT and CRT and you're trying to level up, and I'm the laziest person on the planet, and reproducing the same shit is just dumb for me. I hope you guys understand what I mean. So we start by explaining the chart candle mechanics and what you expect from an expansion candle or the third candle. So the elements of a expansion candle is first of all is the invalidation, second of all is the key level, and we have the opening price, right? And we have the range. So this candle becomes a range, so it forms reversal and it expand. Now we have a daily range for the next day to work with. So those are elements, because the third candle is actually an OTE, right? It's just an OTE into this candle, then expand. So we are trading a lower time frame reversal in a higher time frame trend. So higher time frame trend or higher time frame retracement, but it's lower time frame trend, and we're trading a reversal. So lower time frame reversal, but in the direction of a higher time frame order flow, right? It could be a higher time frame retracement or expansion, it doesn't matter. So we start by talking about the types of an Opens law. There are multiple Opens law, which means multiple 3 candle models. They are not the same, right? Each one have some specific characteristic, some have others, and so on. So the basic 2 candle, because if you see the hard time frame, if you see the 3 candle, they look the same, 3 candles, but inside are not the same. So first of all, the first profile, we have an expansion candle without liquidity pools. So before this candle opens, there is an expansion, of course. So this expansion here, low to high, it doesn't have any pullback into it. So it just doesn't have something like this. So those before the opening price of new candle, this called a pre-liquidity pool, right? After the open is a new liquidity pool. It's gonna form, right? So this example, we don't have a liquidity pool. Once we don't have liquidity, it's not the same, guys. Just pay attention. Expansion, no liquidity pools. On the next day, if you're trading an expansion candle, we need the key level, we need the OT, of course, right? And we need a after open liquidity pool, new liquidity pool, then we need the purge of this liquidity pool, right, into key level at a key time. About key time is gonna be discussed soon for manipulation, right? Second example, we have an expansion with the pre-liquidity pool, and after the open we create a pre-liquidity pool, and we take this as well as this into the key level to catch an expansion. Then we have an OTE here, of course, just the same, because we are dumping below an old low. It's an hourly. Since I'm using the daily, I'm gonna focus on the hourly, right? So you have an hourly for if this is London, this is gonna be a New York OTE. Same here. So expansion liquidity pool, we use it key time expansion. Here we are below the pre-liquidity pool, Asia, London, OTE, classic buy. So we are below a pre-liquidity pool. We create NG liquidity, could be Asia. Then we purge both of them, which means this already purged, but we create liquidity will below it. Then we purge both key level expansion. So we have Asia, London, New York here. Classic buy. It could be this London, ranging, New York, flip, then an expansion happen. And if you pay attention, there is two trade opportunities. We either catch the low of the candle or catch the OTE, which is the soup. And we have the exit technique to pack the daily range. First opportunity, love the candle. Second, the OTE, the manipulation, hourly dump below hourly low. Then we have expansion. It's not hourly low. You can use it on every high time frame candle. Could be daily, for hour, a monthly, anything, weekly. Just look the same. But this is basic for the daily. Low of day, continuation, back the high. Right? And the same is going to be here for an OTE below the 15%. Engineered, those OTE levels are very sensitive because most of the time you see key levels inside those levels, like the actual key level. The real key level is going to be in this area here, right? So this is something to mention, right? Liquidity pool 62, engineered, key level, expansion, and the same here. OTE, pack the high, OTE, pack the high. Now is how to trade an expansion candle. So there are key elements of a high probability setup. First of all is the invalidation. And of course, this is after the market profiles. So first of all, invalidation, really important. Second of all is the key level. It could be opening price, and it can be, since we are using the daily as an example, it can be a daily RB, or for our RB rejection block, or opening price of for our order block, or opening price of a daily OB, or a modern one, basically. Second of all, third of all is the opening price. So the opening price is time. This is time. Really important. We can trade. We have trade idea without the opening price, right? And we also need a pre-liquidity pool or new liquidity pool or both, which is what I explained before. So you draw your and also on fifth, and also you need a discount and premium of the previous candle, which is this specific candle. Now, so you draw your liquidity pool, you draw your fib, and you wait for the pattern. I will call it a pattern for now, but this is actually a pattern because what you're doing is actually waiting for the same thing to happen again and again. Okay, so liquidity pool opens low. We have a liquidity engineered after the open, below the liquidity pool, and then we have the manipulation. And if you go back into my Telegram, I talk about the entry technique. I talk about the if you are bullish, we sell below the open, below an hourly low, right? So on the daily range, we mainly use the hourly time frame. So this is an hourly low, and the dump below an hourly low. Then we can, so the entry is going to be here. Then we have the expansion. Then we have a engineered liquidity, and we have the OTE. So the OTE is actually a Georgia soup, and we have the second expansion. So drop below the open, liquidity engineered, taken, expansion. Then we have the OTE, another expansion. So expansion, Georgia soup, expansion, retracement, or OTE, expansion. And this is really important here, because we're gonna use this for the exit. This is how you exit. This is how you pack your daily range, like a daily range, sorry. By looking for an hourly Georgia soup after the second expansion, and we'll go into details on the examples. So this is the classic buy candle, right? Asia low, London SMR, expansion, New York OTE, one profile. And the second profile, and before going to the second profile, is we are blending everything here. So we have a pre-liquidity pool, we have the fib, and we also have the key level. So we're blending everything. And of course, here, when I'm talking about liquidity pool, you can delete liquidity pool here. This example. And also I'm talking about, this could be London, New York. So it's like a New York flip, right? So I will go over the details on the examples. So the profile number 2 is when we open high. So we're expecting a classic expansion candle, bullish expansion, but it didn't go below the open. So it didn't follow the rules of an OTE, just opens high. Now if we opens high, right, which means and we start rejecting low broken highs. So after rejecting low broken highs, so we are trading, this is the system, right? So we can't have a trade idea without a manipulation on the daily. Without an hourly manipulation, there is no trade idea, right? So once we opens high, we engineer liquidity. This is the first signature. Now, what do we need? The manipulation. So after the market dumps below this low, now we have trade idea. But the thing is, we already expanded, right? So we don't expect this market to go all the way here, because we are on an expansion candle. Well, this is after market profiles. Now it's gonna look like this. A high, a key level, maybe FVG here, expansion, Georgia soup, expansion. So this is the continuation, because you don't have trade idea here. There's no way you're gonna predict this open high, right? But once it happens, already happens, and you can anticipate this and trade it. And of course, the exit is the same, right? Now, talking about SMTs. So once I'm trading an expansion candle, I don't care about SMT, actually, because I'm trading below an odd low. So if both pairs didn't manipulate, now we don't have trade idea basically. But the pair that drops below an odd low, we are trading. We don't care about SMTs. We trade the pair that drops below odd low, right? So this is about SMT. And about the time for the manipulation. So for London, we have the Asia low. We have Asia, and we have the manipulation below Asia, which is this profile here. So this is Asia low between 20 to, I'm not gonna say the time, between 20 to midnight. then we have drop below midnight. So this is below the open, below midnight, below an hourly low in London session. So the time to look for Turkish soup, it's like between 2 and 5. But I can say the 1 a.m. candle. Right? The 1 a.m. candle is a really high probability candle for low day. But the perfect time for look for the soup, I would say it's between 2 or 3. This is the perfect time for the soup. And for a continuation is 9 and 10 to look for continuation. So if we opens high here, maybe 9 or 10 would provide this because we already expanded, right? And of course, once we expand on London, we expect a New York OTE, right? Because price can't go always up without a manipulation. If there is no manipulation, there is no trade idea. Like you just you don't have an edge. You just stay away. Okay, and of course here the exit is the same. An hourly high to back the daily range. And what else? I think I already cover everything, and it's gonna be easier once we go into examples. All right, so we talk now about the open high low closed and the open low high closed. So just pay attention, it's gonna be very advanced. So we have the classic open high low closed, and you can reverse and vice versa. Now, if we open high, right, within this open high, there is a trend, which is this higher time frame retracement, right? But it's lower time frame trend. And into this open high, into the key level or the liquidity pool, right? Or the SMT or something, there is always a high probability turn soup into the key level. And I'm gonna go over how you can trade it. So this is the first trade, and it's gonna look like this. It's just a classic. You can see it as a classic buy candle, right? So it opens low, liquidity engineered, broke, flip the high, then the soup, then we have the exits here. The same thing here. It just need a high probability target, and also the logic of how the candles opens high or something. I'm gonna go over the details. So this is the first trade, and we have trend. So we can follow the trend, then we can expect. And now I already talked about episode 1, episode 2. I already talked about how you can profile the market, which means catching the expansion. So you are waiting for this to happen to catch this, waiting for retracement to catch an expansion, right? Now I'm talking about how you can catch a retracement and the expansion, both, because sometimes this open high can be a very high probability, right? Exit can be a very high probability trade. So this is the type, and yeah, there is, of course, there is a the closing end of the candle, which means if the candle, this is the wick of the candle, this is this after we saw, and it's the same. It has like a very high, it can be a very high probability, especially on the higher time frame. So sometimes this is just a weekly candle, right? On the monthly, this is the monthly, this is just a weekly candle. Sometimes this a weekly candle, so you can't just wait for 1 week But if you know exactly what you are doing, right, you can actually trade it, right? Now we have the opens low. So once an opens low, if we can confirm this opens low, now we don't have an open high, which means we don't have an idea of catching a retracement, right? Because the market opens low. But once the market opens low, there is always a high probability retracement, whatever to the opening price, right? Or to a higher time frame key level is going to be here. And there is a chance of flipping the opening price into it and continue higher. So this can be a high probability trade of the candle itself. It's not from here to here, but it's this here to the open. And this is exactly what happens on the NGU on the week 3, I believe. Right? So once we opens low, right? So we didn't have profiles here. Just market just opens low. So we either continue with the move until we hit some relevant level, or we wait for example, we wait for, and of course this retracement, these expansions happens on the open of new candles. So if this is the monthly candle, and this is gonna be a weekly retracement, weekly expansion, weekly retracement, right? Then week 3, maybe something like this, right? So here, from here to here is a high probability expansion candle. So just profiles, opens low, we have the opening price, we have the flip, and we have always the soup. And this is you can call it the kiss of death, and this is the exit. You can call it the kiss of death because there is true tail idea here. We either catch the low or catch a continuation here. So if you are a beginner, you always want to catch the continuation because you don't know sometimes if this is going to be the low, because sometimes the market is just going to drop. But after the market gives signature that we are on the low time frame, we are bullish. So higher time frame retracement, lower time frame trend, right? Lower time frame trend. So this is a retracement on the weekly, but on the hourly is a trend into the key level, right? Now we know how to trade this with confirmation. Now we know how to trade this, and we can also, after the market profiles, we can be on the higher time frame direction after the profile, right? And we can also trade this. And if this is given, which is the close of the candle, we can also trade it. If we, of course, hit a relevant level, a key level, or a higher time frame liquidity pool, something like that. So on examples, once we see some examples, it's gonna be easier for you guys to understand this. Okay, now we start by how to trade an open high of a weekly candle. So as you can see, guys, we have a manipulation on the candle model. So we expect an open high on this specific candle. So if we draw the opening price of the weekly candle, now we go into the daily. First of all, so if you are expecting an open high, what is the key level that can sponsor the move lower? So we're expecting a bearish candle, right? But what is the key level that can sponsor the move lower? First of all, you see this FEG. So you draw the opening price and the other high. And you can also do is go even lower into the 4 hour. So we have at the beginning of the FEG, so a really high probability target. Also, what also you can do is the OTE. If we're expecting an open high, right? So above the 15%, right? Discount premium. What also we have is the opening price of this 4-hour candle. So those all of these are high probability targets for us to frame trade idea, right? Now, so this is the on EU, this is on GU, same thing. So we draw the opening price and we draw the target. So this opening price here is really high probability target for us. So we do the same for our discount premium and the FVG. So we have Monday here. So before Monday, you're gonna monitor this FVG, right? So we have the target here, and we also can do the discount premium. Yeah. So it's 15%. Now, then you wait for the markets. You go to the hourly, and what you can see here, we have an open low. So we created a liquidity pool below this liquidity pool. I usually use the 4-hour for high probability. So for our liquidity pool, right? Below it, we usually liquidity take it with SMT, right? And then where's the confirmation that we are bullish? So we don't want to force this, because this, you can trade this for advanced people, but you don't want to force this. But once we flip the high, this is the high that caused this low, the high took the low. Once this broken, now what do we need? We need the high, we need the swoop for expansion, and we need the close. Sorry, I'm gonna draw it here. So we already flipped the high. Now we need a low to be purged, and we need an expansion, we need the exit. It's the entry to exit. Now if you go to EU, we have the same thing, SMT here, flip of the high. Now we have the liquidity pool, right? This is the entry. Now what is the exit? What do we need? We have the targets. So the target can be used as an exit, but for advanced, if you wanna, this for advanced people, you wait for, you wait for the purge. You wait for the purge after the manipulation, which is you wait for a high, trade away from it, high, trade away from it, then purge it. This is a high probability exit, right? This is perfect exit, right? So this open high into key level now becomes a very high probability trade. And if you're wondering, at the manipulation time is 10, right? With an open high. The low is at midnight, so it's not at the key time. But after we flip, this is the high probability, this is the key level here, right? The high. If you go back into the drawing that I showed before, you will understand the key level. Okay, now we don't care about SMTs because we trade the pair that's manipulated. So we don't care about GU because we trade EU because it's the pair that's manipulated. The exit is the same because after the manipulation, SMT, wherever, expansion, we trade a high, trade away from it, swoop it, this exit. So this is a very high probability trade for an open high. And here, we don't care if the market goes here. This is it. You trade this. You can take partial here, wait for this key level, but we don't care because we already hit the key level on EU. So it is a potential reversal is gonna happen here. And this is exactly what happens. We flip a low. Once the low that took the high gets flipped, and 2 times, right? Here we didn't flip it, high, whatever. This is a reversal. I'm not gonna talk about reversal. I'm just gonna talk about continuation. So this is a trend. This is a continuation trade into retracement. So higher time frame retracement, lower time frame trend. right? So this is a very high probability trade with an open high. Once we have a high probability target, liquidity pool, kilos, discount premium, whatever. Now this is GU. So let me explain this in relation with an open high, open low, and the trade opportunities that happens here. So the best case to use the open high, open low is once we have a high probability target. It's like usually once we close up, once we engulf a up close or a down close candle. So week one here, we opens low, right? So we expand. So we expect this is the week one. Usually week one here opens here, but this is the first week that opens after the open of the month. So usually we wait for a weekly manipulation, but once the week opens low for the monthly expansion, sorry. So this is the third month, right? This is the third month on GU. So usually wait for a weekly manipulation or something. It didn't happen, we opens low, which means we have market profiles on lower time frame trend following the direction of higher time frame candle of the monthly into the liquidity pool, into the key level. But the thing is we opens low. So if we opens like this, as I explained before, opens low, we have a chance of an OTE into the open. Then maybe continue the move, or we flip at the open and expand. So this is the idea. So the opening price here of the open, okay? And then we have the new candle opens. If it gives us a lower time frame confirmation, we can take a trade into, first of all, the opening price of the higher time frame candle. So this is our target. So we have trade into here, maybe trade after we hit this key level. So we can't wait for retracement, because sometimes retracement gives high probability trades. And the same thing here, after this candle closed, so we have 1, 2, so we expect bullish prices, maybe here, 3-candle model, we can sell into the opening price of the rejection block. And if it fails, which means the rejection block gets flipped and we have a bearish candle, now what we do? We engulf this candle, which means we have another chance of trading an open high into this opening price. Then we can trade the higher time frame direction. Now we see, right? So this is all the trade opportunities that let's have. So let's go to the details. So I'm going to start with this and then start going back in time. So we have an opening price. We have the open. So we have trade ID from the open into the opening price. And if you go to daily, so we have the Monday opens here. So what do we have on the daily? So we have a daily high, right? We have of course, the key level, which is the 15% of the OB here. We have the FEG. So those are all of this. We have the opening price of the weekly candles. It's a very high probability targets here. So we trade first of all, but all of these are a high probability targets also. If you go to EU, right? EU opens here. So what's the target on EU? First of all, we have the rejection, the OB, model 1, and we have the range, right? So this is the range. This is a liquidity pool inside the model 1. So if expecting a bearish candle on EU and GU, and of course there's RB here, if you are expecting a bearish candle, so this is a high probability target. Now we can buy into it. Now if we mark the opening price and go to the hourly, now first of all, we opens low, right? What do we have before the open? Do we have a 4-hour liquidity pool? No, we don't. Go to hourly. Now, below the opening price, what do we have? We have liquidity we engineered and taken, expansion. Now we wait for this. Once this gets flipped, this becomes a high probability target. Now you can see this target this is the opening price. We may reach here, but what do we need? We need an hourly low, and GU gives the opportunity to go long. So GU opens low. This is the opening price. Opens low below the open. So we have liquidity engineered. Turtle soup. This is a high probability entry, by the way. Now, once this high took this low get flipped, now what do we need? Liquidity engineered, turtle soup expansion. So we have the framework of an OTE, right? So London 3 a.m. low of day, New York OTE, turtle soup expansion. Now this is the opening price of the weekly RB. Now we hit this level, but once we have once EU didn't hit anything, this becomes a very high probability target, because even this, we are not using only this. Like basically, we are using another techniques, right? So, and also to keep in mind, key levels need double tap, which means need something like this. It's not gonna hit some, right? We can have this soup here, but this is an exit here for bullish market profiles. Now, once we soup here, expansion. So you either exit at the high, or we have the soup for exit. This is advanced, right? And this is a good point to exit. But yeah, this is really it. So on EU, we have the SMT happens here. So if you traded EU, right, once we hit the key level, this is the exit here, right? Once we took it again, you close the trade. So this is an open high of a weekly candle. This is a very high probability trade here. It usually happens on Monday, Tuesday. Really high probability. And this is exactly how you can trade Monday. Sometimes. Because sometimes Monday is very high probability. Now we go to week 2. We go back. Okay. Now we have this example of an open low. Once this market opens low, right? Now what do we need? A target, rejection block, but this is following the monthly candle, right? Which means we're following the trend. We have a bearish market profiles, right? So once, if you go to hourly, basically, so we open high, we open low first, soup, right? Then okay, so talking about this candle here, once we open high, this candle opens low. So we expected an open high because it's the first week, so we expect a weekly manipulation, but it didn't happen. We opens low, and this opens low, which means bearish market profiles. And if you are expecting a retracement, it's not gonna happen this week. It's gonna happen most likely the next week, right? If this week delivers and hits relevant levels, RB, it's high probability, like it's more likely that the next week is gonna provide the OTE into the opening price of the new month, because the monthly opens like this. Then it's gonna go back. So the monthly opens like this. Then we're gonna go back into the open or flip, go back or expand from the open. And if you pay attention into EU, it opens without any wicks, which means an open low, which means most likely the next week is going to be a retracement. And we also engulfed this candle, the opening price. So this is a high probability target on EU and GU. So we have an idea of the next week of an open high. Now we are focusing on comp trend. I will talk about the soon on the trend trades, right? But this is how to operate on the highest level, basically. So we have the opening price of next week. Let me draw the targets. The opening price on both. Now the candles deliver. Now let me do this, because this is the opening price of the monthly open. This is the monthly, basically. I'm gonna leave it like this. So once we opens low, so we have bullish week now because the monthly opens low. Now we have the opening price of the OB that we engulfed on the weekly as a target. We also have the opening price that we hit on this pair, and we also have the engulfed opening price on the weekly, and we have the monthly open. Those are all high probability targets, but first we need bullish market profiles, we need confirmation, then we can take the trade. Now if you go to the hourly, so this is the week, so we opens low, right? Monday, Tuesday manipulation, and of course, first of all, we need a very high probability, so now we opens low, very high probability liquidity pool, probably this. After the open, we need a, most likely it's like 4-hour low to be taken, then flipped. Then we can take, or you can use a higher time frame candle, which is the daily manipulation towards the key level. So 1, 2, I expect this expansion candle. So if you go to the hourly, now we flipped, right? We opens low, we broke the high that took the low. Now we have trade idea of we're bullish next day. So the daily opens here. Of course, on EU and GU, we have an opening price here, right? A high took the low, getting flipped. Now we have an idea of taking a continuation into the key level here, or the opening price. Now, what do we need? A dump below low. Now here on Asia, at Asia open high rally. So we opens the candle. We don't have a soup here. So if we dump here on Asia, it could be a high probability trade if we reach this key level, but we didn't reach Asia rally. Then we engineered liquidity. Then we took it here, key level, expansion. Now we have the entry, right? This is a very high probability trade. Of course, there is the entry is here. The first entry on EU and GU is here, but the continuation is here, right? The continuation is here. Now after the expansion, right? What is the target? Now we have the opening price of the weekly, or we can have a charger swoop after we hit the key level. So this, you can say that this is an exit, but it's not, because the key level is here. So the exit is gonna be here, because after we hit the key level, we have an hourly swoop for exit. Or you can go to GU. This is the opening price. This is the monthly open. So after we hit the key level, this is the exit, right? And we don't care about if the markets keep expanding. We don't care. So you take this trade. This is a daily range. This is a high probability, even if, so we can't wait because the market is bearish, by the way, but you can't just wait for the market to align, because sometimes you miss a very high probability trades, right? So this is a very high probability trade into the opening price. So the weekly and the monthly open, of course, we didn't flip the monthly open, which means we have the idea, we have the profile of opens low, OTE into the monthly open. And we have SMT on the monthly open, because GU hit the monthly open, EU did not, right? Then after we hit this key level here, now we decide if we are bearish or are bullish. So there is two ideas here. If we are bullish, now this is a high probability, this is the key level. So we have an idea of opens low into key level expansion, right? And if you are bearish, right, you just wait, because once we hit the key level, we wait for what? We wait for a daily 3 candle model, basically candle 1, 2, 3, or we wait for swing formation, or we wait for daily model 1. So all of these are confirmations, but if we have it here, we may go lower, because this is the starting point that is gonna take us into this low. Then we gonna either respect the key level or we flip it. But the idea is there is a high probability trade into here. Now after we hit this, we can look for confirmation to take longs if it's there. Now let's mark the key level. Oh, my bad. So we mark the key level and the opening price, right? Same on EU. We high probability targets, and you can refine it into daily. So daily opening price, also the OTE, a discount premium, basically. Okay. If we are bearish into the key level, so this level it's a good target. Same thing on EU. So if we are bearish, right, those are good targets. So we have the opening price below the 15%. We have the rejection block also. So those are all targets, but we don't need all this move we don't need to catch all the move. We just need an entry, right? We just need an entry and exit. That's it to catch this. Now the weekly opens. Now we open a high, right? Do we have a 4-hour high? Yeah. Open high turtle soup, and then we start rejecting the low. So we broke the low, that took the high. Now any pop above a high at a key time is a sell, because we have a target here. We have an idea of an opens low, and we already confirmed the open low is gonna happen, because the lower time frame is switch. So this is, you always want to wait for this to catch a continuation. Now, so open high, flip, start dropping. This is an entry, but it's not a key time. It's 17, it's the opening of the candle, so it's not a key time. Then the market drops. Then we create a high probability turtle soup here. So this high took this low. Now once we get souped, it's like 12. This is a high probability turtle soup to target all this level. So first of all, the opening price, the RB, sorry, the RB, this level here. We have the I don't know what is this. Yeah, so we have the 62%, we have the 72, we have the rejection block of the daily, right? But for advanced exit, once we broke this low, where is the exit? So this is a really high probability exit, right? So advanced. I don't know why I'm showing this, but yeah, you got it, guys. So this is a high probability chain. Now, on EU, let's see what happens on EU. Okay, so EU opens high, right? Probably have an SMT here. So once these lows getting this the low that took the high getting flipped, we close about below it here. Then we have a high probability trade. So at what? At 11. And if you pay attention, this is on Monday. So Monday create the high, it flipped, it gives another OTE. So this is a very high probability. Now what do we target? The 15%, the rejection block, the 62, right? So once we opens low, right, and hit the key level, probably the RB, this is an exit here. And we don't care about this move here. So you get your piece, you kept your daily range, and you get out. Now, after that, you have two ideas. We either follow with the trend or we reverse. But since we have a key level, now we have an idea of we have another trade. Now we're gonna wait for confirmation. Then we follow the higher time frame order flow. Right? So we do the same thing here. We just wait for a daily manipulation, swing, blah blah blah, and then we take the continuation of the next day. It's just the same. Okay, now let's talk about how to trade the daily expansion following the higher time frame order flow. Now we have the 3-candle model on the monthly. We have the monthly open. We have the idea of weekly manipulation. So week 1. So here on EU, week 4 manipulated, and week 1 we have an SMT. So we have an SMT here. So SMT is just a manipulation. So after week 1 manipulation with GU, of course, GU week 1 manipulation, we expect week 2 expansion. And for week 2, we expect an OTE basically. So if we delete all of this and focus on week 2 after the manipulation, right? It's week 2 here. So week 2 is an OTE. So basically we wait for, we can actually talk about week 1, right? The SMT after the open low, because it's just the same. So week 1 opens low, daily liquidity pool, and we have the signature. So after the daily manipulation, we can expect that the monthly is aligned, or sorry, the weekly is aligned with the monthly, right? Now we expect this week to manipulate, to be a manipulation week after the manipulation, and we take the continuation, which is the 3rd day, right? So if you go to EU, so we have the SMT here, and we have the daily manipulation, and we have a high probability expansion day. Now, let me go back a bit. So if we pay attention on Thursday, okay. So on Thursday, if you go to on the 4-hour, what do we have? We have a manipulation day with what? What is this? A liquidity pool. So we don't just have a manipulation expansion. We have a manipulation with liquidity pool inside it, which means we're gonna use it on the next day. So if you go to the hourly, right? So we have a liquidity pool here. I like using this drawing. So the liquidity pool, and we have time. So the key level here is the daily rejection block. You can use the 4-hour rejection block also below the liquidity pool, pre-liquidity pool, so, because the daily opens here. Now we have an opens low, right? Let me draw this high probability elements for this. Those are the elements for a high probability trade. Expansion day, pre-liquidity pool, OTE, right? 62, a daily rejection block. Sorry, a 4-hour rejection block with a daily rejection block. So this is daily. Let me draw it on. Let me do it red. Daily rejection block, 4-hour rejection block is gonna be green, right? And the OTE and the pre-liquidity. So what do we need for this day? Just an opens low, take the liquidity, hit the rejection block, and give us a lower time frame entry here. So you go to lower time frame, model 1, anything will work after this. And this is how we trade an actual expansion day. Now we have the same thing on the next week, and of course you hold the trade all the week, right? So we have the next week, the third week, which is after the week after the manipulation. So opening price, we have a key level, this just right, and we wait for the market to align. So we have Wednesday and Thursday manipulation, so we expect what? An expansion, right? Now if we go to 4-hour, sorry, let's manage the GU, because we have GU manipulation. We have the opening price, right, as a key level. So manipulation to key level, and then the market is aligned. So if you go to the H4, let's start with the daily, because we need to draw the key levels. So we have the RB, and we have the opening price per hour, right? And of course we have a range here, and we have the OTE, right? Now we have an expansion. We don't have a liquidity pool, but the range is a liquidity pool, the pre-liquidity pool, sorry, because the market opens here. Now on EU, we do the same. Opening price, we have a range here, we have an expansion, OTE, we draw the lines, high to low, blah blah blah, FPG. Now we go to the hourly. Now if you're trading, if you're monitoring only EU, what do you expect? Since you have a range on the H4, you probably expect a deep retracement, but you will not have it because only stops at the 50%. And this is what monitoring both pairs is gonna give you. Is gonna give you clarity, because one pair needs to drop. Like there is no way that both pairs gonna stay here. No, the one pair needs to hit key level. If there is no key level, getting reached, there is no trade idea. Now we reach the key level. What do we have below the open? Right? This is the key level. This is the, let me draw it again for you guys. So we have the opening price, let me draw it on red. Opening price of a 4 hour. We have also an opening price, sorry, we have a rejection block at daily level, right? Now, what do we have above the liquidity pool soup expansion, right? So this is a trader soup expansion, OTE expansion. So, and this is an OTE. This is an OTE without a liquidity pool, right? I don't know why I'm giving this, but yeah. Okay, let's go. So, and always we expect another expansion, of course. So we have trader soup expansion, OT expansion. If the weekly opens here and we still don't have another expansion, there's going to be another soup, right? And exactly what happens here. So we didn't have we have a weekly open here, Sunday. But if you go to EU, so we have opens low, expansion, OTE, new hard time frame candle opens, trader soup expansion, right? Because after the manipulation we have expansion, after the OE we have second expansion. Since the second expansion didn't happen, we expect a soup, right? And this is the Monday. So, right? And if you pay attention here, on this week, right? We closed above this opening price. We have Monday opens. We have a liquidity pool, right? For our liquidity pool, Asia, British markets, to expansion. So this is how you cap. So if you trade, basically the pattern is just the same. So the system is the same. Liquidity pool below the open, then we catch the OTE, then the exits. It's just the same. So sometimes if you don't have an OTE, then there is no trade idea. You just miss the move. And that's why trading London is really important in specific days, right? After the manipulation, third week, after the manipulation, after the swing, blah blah blah, London will give a very high probability trades to trade the daily range, because it's gonna give you like a high RR, right? Okay, so talking about this week and what happens and what I have already explained. So as I was expecting a bullish week here, right? Now, if you do the profiles on EU and GU, right? Rejection block, OTE, and I was looking for buys, and I was looking for the market to align. So you wait for the market to align, a daily manipulation inside the daily level, right? Then what's next? A classic expansion candle. Now if you go to hourly, right, what do you have? We broke the high, expansion. Now we start drawing the elements by probability trades. So you have the OTE, you have the opening price, you have the liquidity pool Asia, right? And you have the manipulation, right? You have the range. Since we don't have any pre-liquidity pool, so we need new one. So once we open low and created this low, we manipulated here, but it's like it's not enough You can't call this a manipulation. Sometimes it works if we close above this high. You can expect this low to hold. But for me, once we rejected this high, I was expecting this low to be taken, right? And exactly happened because this is not enough. So we have liquidity pool below the opening price, below the 15%, Asia low. Now 1 a.m. opens, miss to give a trade. 5 a.m. opens, take the liquidity pool. What do you expect? Below this liquidity pool, a manipulation. So you wait for lower time frame confirmation here, and you take it until. So now you're looking for the targets. So basically the daily range, right? 1, 2, 3. This is a very high probability target inside the kilowatt. So this is a really high probability target, and this is so my trade idea was on this day, right? If you go to Telegram, I entered here, and I took partial like 70% or 80%, like here. I was expecting a breakout, right, into the monthly open and this weekless candle. It didn't happen, and let me show you guys when I close the trade. My trade idea gets invalidated here. So once we hit the doll, right, on Tuesday. So on Tuesday, what we actually did is we hit my target here. Tuesday, I gave it a try. So I was watching for this low. Once we have this soup close above the high, my stop loss, so my entry was here. My stop loss was here. I trailed my stop loss. And my trade idea I fully closed here. Then I switch, if you go to switch my bias to take shorts. So I catch 2 days of sells into basically these levels here. So this is an expansion day. And yeah, just something to mention. When I'm trading OTEs, guys, when I'm trading OTEs or low of the week or the OTE, which means the expansion day, the third day, I'm always holding. I don't add more often. Sometimes I add, but sometimes I don't. I don't like adding a lot. So you either catch the low. So I have two trades per a weekly candle. I either catch this, the low, or catch the OTE. Those 2 trades I can hold for the weekly range. I don't like trade this, right? So I only trade these 2. And this is really important. And if you finished until here, you should only trade the third candle for a long period of time until you become a profitable trader. So all the payouts, all the money that you're willing to make is inside this candle. And I hope you guys liked this episode, and I will catch you in the next one.